Dubai's real estate market has been catching global attention since 2021. Prices per square foot have soared over 37%, jumping from 1,212 dirhams per square foot to 1,665 dirham per square foot in just 3 years. But here's the real deal. When you actually zoom in, you see a clearer picture. I want to show you 3-year returns for some apartment projects in Dubai to demonstrate this better. On your screen, you can now see that in just these 5 quick examples, there are varied returns of as high as 77.5% to as low as negative 15%. So what does this mean for you as an investor? It means that investing in real estate is not just about choosing any property in a trending location. You need a clear strategy, a strong grasp of the market, the right timing, and deep knowledge of different asset classes. Hi, my name is Tabishi. I am a real estate investment advisor with Experience Realty here in Dubai. If you're looking into expanding into or entering your investments to Dubai, this video will equip you with some powerful tips that can help you identify high potential properties. If you find this information useful, please like the video and share it with anyone who you think might benefit from this information. So here's how we'll break it down for you today. In part 1, we will understand the fundamentals. These are the very basic things that you need to know before you jump into real estate investing. In part 2, we will do a brief walkthrough of the Dubai landscape. I will take you over the key zones, asset classes that you need to know about. And finally, in part 3, we will discuss 5 investor tips to help maximize profits. Practical, data-backed advice to help you make smarter decisions. So let's get into it. Now, globally, real estate is valued at over $230 trillion, making it the largest asset class in the world, bigger than stocks, bonds, or even gold. This makes it more than 10 times the value of the GDP of the United States of America. On average, real estate accounts for around 60 to 70% of total wealth held by individuals globally. In our personal circles and in the broader world, we see that real estate is a wealth multiplier. It is where people live, people work, and build memories, and also grow fortunes. So clearly, real estate investing can never be a bad idea. Although, big-ticket investments come with big risks. And that's why you need to get your fundamentals right before you jump in. Let's quickly break down 3 essentials every investor must know. The first one is you need to clarify your investment goals. Think about what you want to achieve and why, and avoid making impulse decisions. Question yourself things like, what is my objective? Is it capital appreciation? Is it rental income? What is my risk tolerance? How is this investment placed in my complete investment portfolio? Next, remember, plan to hold your property for at least 3 years. Real estate is a long-term game. The best gain comes from rental income and capital appreciation that come with time, not overnight. You need to have a holding period of at least 3 years in mind. And finally, manage your finances smartly. Decide whether you'll invest with cash or through a mortgage or a combination of both. In Dubai, mortgages are available to residents and non-residents both. Look into your future cash flows to ensure that you can meet recurring payments such as EMIs or installments to the developer. This will help you define a realistic budget from the very beginning. Now, once you've understood the basics of real estate investing, let's bring that knowledge into the context of Dubai's property market. While real estate is an industry that has been around for thousands of years, Dubai's market is still quite young. It really took shape in 2002 when the government passed a game-changing law allowing foreigners to own properties here in Dubai. That's just a little over 20 years ago. This means that the market is still growing, evolving, and is full of opportunities. Today, there are over 300 active real estate developers in Dubai, which means that you have a wide variety of projects and properties to choose from. But this also means that you can feel very overwhelmed, especially if you're a new investor. Now, you can broadly divide Dubai real estate into commercial and residential investment opportunities. Commercial opportunities include land plots, warehouses, and offices. The residential options include plots, villas, townhouses, and apartments. Let's focus on residential real estate for the purpose of this video. I would like to simplify your options by explaining to you the geography of the city. I like to divide Dubai into 4 broad investment zones. The first one, the urban center. This is where 65% of the city lives and works. Think downtown, Business Bay, DIFC, Bar Dubai, Dubai Creek Harbour, and District 1. Second, the waterfront. This is where 80% tourists visit or stay during their trip to Dubai. Think Pearl Jumeirah, Dubai Marina, Palm Jumeirah, and the new Palm Jebel Ali, the upcoming Rashid Yatsen Marina, and Dubai Maritime City. Third, the fast-developing Dubai South. So like most metropolitan cities, Dubai too is expanding to the south. This area covers the new Al Maktoum Airport, Port Jebel Ali, Palm Jebel Ali on the waterfront. And lastly, the urban districts. Think Emirates Living, Dubai Hills Estate, Damac Hills, Jumeirah Village Circle, and all the other residential communities around. These are a mix of villa, townhouse, apartment communities preferred by residents of Dubai. All of these zones are very well connected through Dubai's excellent road network, including Sheikh Zayed Road, Al Khail Road, Mohammed bin Zayed Road, and the Emirates Road, making it easy to navigate the city from the north all the way to the south. And the Hessa Street, Umusaquim, Al Qudra, Al Ain connecting the city from the west to the east. Understanding these zones is critical. It will help you compare prices, growth potential, and rental demand. All of these are key to making a smart investment decision. A well-educated and experienced advisor will provide you the support you need to understand these important factors. Now that we've laid a strong foundation, let's get into the part that you've all been waiting for. Here are my 5 tips to help you invest smarter, reduce risks, and maximize your profit in Dubai's real estate market. Tip number 1, watch for infrastructure growth. Dubai's biggest real estate growth stories have always followed infrastructure development. Top developers are always the first to launch projects in upcoming zones. What's very interesting is that Dubai has announced its largest ever government budget for the years of 2025 to 2027. This amount is a total of $74 billion. For 2025 alone, $23.4 billion has been allocated, with nearly half, that is 46%, going directly into infrastructure development. Why, you might ask? Because there has been a population boom in the last 5 years, implying a natural demand for more infrastructure resources. A number of vehicles in Dubai during the daytime hours has reached 3.5 million, with a 10% increase in registered vehicles over the last 2 years. If you compare this to the global average of around 2 to 4%, you will understand just how fast Dubai is growing. So it's key to identify where these massive budgets are being spent. Let's take the success of Dubai South as an example. This is where some of the biggest transformations are happening today. Dubai's government has invested over $300 billion in this region, aiming to replicate the success of Dubai International Airport, Mina Rashid, Dubai World Trade Center, and Palm Jumeirah by recreating this with Al Maktoum International Airport, Jebel Ali Port, Dubai Exhibition Center, Palm Jebel Ali, and the Etihad Rail project. This area also houses Expo City, where Expo 2020 welcomed over 24 million visitors from 178 nationalities. Now, Dubai South spans over 145 square kilometers. The government has brought in private developers to help shape its future. How did this support real estate value so far? If we look at Emaar South as an example, this project was launched in 2018 at a value of 640 dirhams per square foot. Today, properties here are trading at 1,480 dirhams per square foot. a 130% appreciation in just a few years. So data tells us that we should closely understand infrastructural developments. If you're looking to stay ahead of the curve, keep an eye on the Dubai 2040 Master Plan and Vision 2033. These future plans outline exactly where the city is headed. Also, follow updates from Dubai's Road and Transportation Authority to see where major infrastructure investments are going. Right now, 3 zones are worth watching closely. The first, waterfront. While Dubai is compounding its population, its economy, and its area, it cannot compound its waterfront. So, as an investor, focus on the waterfront. The upcoming maritime city, Rashid Yachts and Marina, and Dubai Islands are situated at the heart of Dubai's thriving waterfront. This area is set to become a hub for marine tourism in the next 3 years. The government is investing heavily in expanding road networks and coastline extension projects. Another no-brainer waterfront investment is in the Palm Jebel Ali, building atop the immensely successful Palm Jumeirah. The second zone is Dubai South. We covered the details of the zone earlier, and I strongly believe that the zone is still undervalued. This is the home to the Palm Jebel Ali, Al Maktoum International Airport, and Port Jebel Ali. More so, development of Dubai South is leading Dubai to gradually move towards Abu Dhabi, the capital city. And lastly, I would watch out for areas around Dubai land. I have closely captured pockets that are located below Sheikh Zayed bin Hamdan Al Nahyan Street. A key reason why communities in this area, including the Valley, Al Barari, have done very well is the family-focused amenities they offer. Given the still undervalued price per square foot, there is immense potential for the zone to grow as the government improves commercial and social infrastructure. The best part is that you have quick access to Old Dubai, DIFC, Downtown, and Business Bay via the relatively new Al Ain Highway. Tip number 2, look for exclusivity. This one is my personal favorite because when it comes to real estate, rarity is what creates value. Take Marsa Al Arab Villas for example. These villas are valued upwards of 300 million dirhams. Why? There are only 9 such villas in number. They offer a prime location next to Burj Al Arab and offer 360-degree views of the sea. As a result, the prices are sky high and are holding firm. So look for projects that offer something exclusive, something that no other development can easily replicate. Unfortunately, there are developers and projects out there where each one bed looks exactly the same, creating competition for your investment and causing prices to cap and appreciation to limit. Now, to be clear, I don't mean to say that exclusivity is only about ultra-luxury properties. You can apply this principle to even mid-ranged investments. Let's look at Acacia and Mulberry from Dubai Hills Estate as an example. These were 2 of the earliest apartment launches in Dubai Hills Estate. What sets these communities apart? Both are low-rise residential developments offering an intimate community living experience. Also, they offer extremely spacious layouts, further enhancing end-user experience. As a result, properties in these communities are valued at about 20% higher than other apartments in Dubai Hills Estate. Ultimately, better the end-user experience of the property, the higher its value. So in order to find exclusivity, one needs to study the property layouts, understand the community plan and amenities, prioritize the location, evaluate the number of units that are on offer. Studying the demand and supply numbers for the asset type you're going after will further reinforce its capital growth potential. It's also interesting to note the following. First, waterfront properties appreciate faster. Waterfront homes in Dubai are known to grow in value about 30% more than waterfront homes. We have examples of Blue Water residences by Emirates valued at over 4,500 dirhams per square foot. This is about 50% higher than pricing for apartments that are close to the Burj Khalifa. Second, golf view villas like those in Dubai Hills Estate and Jumeirah Golf Estates often sell for 20% higher prices compared to similar villas without a golf view. Investing in a prime property, which is marginally higher in cost, can bring incremental returns that are far exceeding your incremental costs. And now, I'd like to talk about one of my favorite exclusive opportunities that are available today, the Oasis by Emaar. It's a villa community offering only 3,100 villas in a 9 square kilometer area. So you would invest here in larger than average plot sizes and an extremely low density community. The 50% lower than average per square feet pricing implies the immense capital potential of this exclusive community. Ultimately, the key here is buy what others can't easily find or replicate. That's where long-term value lies. Tip number 3, invest in tourism-driven areas. As an investor, we all understand the tourism potential of Dubai. In 2024, Dubai welcomed 19 million visitors. In just the first quarter of 2025, we have already crossed 5.3 million. We are on track to reach 25 million visitors this year. And Dubai has about 4 million residents, which implies that real estate end-use experience is increasingly experienced by visitors. Tourism is primarily driven by families, and B&Bs are increasingly gaining popularity over hotels. So if your focus is on short-term rentals, look into upcoming touristic areas. Even better, bet on residential communities that are close to key landmarks or allow metro accessibility. Let's look at the rental incomes of some established and upcoming tourist-friendly areas. Now, Dubai Marina is one of Dubai's most popular waterfront zones, known for its stunning skyline and vibrant atmosphere. 70% of tourists end up visiting this area during their trip. Nightly rentals in Dubai Marina, even for a mid-ranged one-bedroom B&B, rent out at 800 dirhams per night, implying 250,000 dirhams in rental returns at a typical occupancy of 85%. Let's take the example of Dubai downtown. Downtown is known as the city's heart. It is home to some of Dubai's most famous landmarks, including the Burj Khalifa and the Dubai Mall. Dubai Mall recorded 110 million visitors last year. Occupancy rate for B&Bs in the Burj district go beyond 95%. And even if we look at relatively new tourist hubs, such as Dubai Creek Harbour, one-bedrooms here attract nightly rentals upwards of 1,000 dirhams, implying rental yields upwards of 15% with a conservative 75% occupancy rate. Now, when you're looking for high-yield, tourism-driven communities, I also urge you to not forget thinking about capital appreciation. Here are 2 great examples that will provide you both. Dubai Creek Harbour by Emaar. This is the most ambitious master development ever undertaken by any developer globally. This is home to the upcoming iconic landmarks including the Dubai Creek Tower and the Dubai Square Mall. This master community combines the pulse of Dubai downtown and the charm of Dubai Marina. The other example I have for you is Expo City. Expo City is basically the erstwhile site of the famous Expo 2020. Therefore, it is already a superb entertainment and commercial hub. It has residential projects that are coming in now. Located just at the brink of Dubai South, it benefits from direct access to the new Al Maktoum International Airport, the Dubai Metro, and key developments like the Dubai Exhibition Center. Now, tip number 4, capitalize on concept stage projects. One of the smartest ways to grow your money in Dubai real estate is by investing early, at the concept stage. Let me give you a very powerful example first. Back in June 2001, construction began on Palm Jumeirah, now one of the most iconic man-made islands in the world. At that time, it was about to be the largest land reclamation projects ever attempted. Now imagine Nakheel, the government-owned master developer behind the project, approached investors with this bold vision: a palm-shaped island in the sea, one so massive that could be visible from space. Now, many people were obviously skeptical, but the early investors who believed in it were the first ones to invest in the apartment communities on the island, shoreline residences. and bought at just 600 dirhams per square foot. Today, those apartments are valued at around 3,000 dirhams per square foot. That's a return of over 350% simply by investing in early and believing in the concept. Now, fortunately for all of us, early stage investing is not as risky as it was back when Palm Jumeirah was launched. History has given us a lot more confidence in Dubai. But how exactly does early stage investing work? It's quite simple. When you buy at the concept stage, you're getting in before the project is ready, usually at a 15 to 20% discount compared to similar such ready properties. This works in your favor in two ways. If the market drops, your discount helps protect your investment. And if the market rises, you benefit from higher returns since your entry price was lower than the going rate. Plus, these projects come with friendly payment plans. You don't pay the full amount upfront. Payments are made in small installments over 2 to 4 years of the construction period. It's important to note that these opportunities are rare to come by and sell out very quickly. This means that it's important to start your research early and make a decision in time for the launch. I would be happy to speak to you in detail about your options on this front. Tip number 5, prioritize master communities. Now take Arabian Ranches 3 as an example. Arabian Ranches is a master plan community developed by Emaar. It is located in the eastern part of Dubai near Sheikh Mohammed bin Zayed Road and the Al Qudra Road. It offers a peaceful suburban lifestyle with easy access to the city's major hubs. Now, this project was launched in phases starting in 2019 and offers spatial villas and townhouses at prices starting at around 1.7 million dirhams. Today, a 3-bed townhouse there is valued at 3.3 million dirhams. And why is this success the case? It's the community. Unlike standalone buildings, master communities offer not only homes but also shared amenities, parks, schools, and retail spaces, creating a vibrant environment for residents to connect. This ecosystem is hard to replicate and is what people actively seek when they look for such areas. The value comes from both the location and the community experience, which is something standalone buildings simply cannot offer. So one of the safest bets you can make is investing in master planned communities, because once a community is established, it's very hard to replicate. You could make the safe bet of investing into established and successful master communities such as Dubai Hills Estate, Jumeirah Islands, and Emirates Living. But if you're looking for upcoming, further undervalued master communities, here are a few excellent examples for you. First, the Valley developed by Emaar. This is an excellent example of a growing community. Located in the east of Dubai near the Alian Road, it offers well-designed villas and townhouses. And the second example I have for you is Nashama Town Square. This is developed by Nashama and is located just off Al Qudra Road and offers a range of affordable houses. It's designed with a focus on community living, featuring parks, recreational spaces, and schools. Many hesitate that although affordable, these communities are quite far from the center of the city. I agree that the distances on average are higher, but then Dubai's excellent road networks come to benefit here. According to the 2023 TomTom Global Traffic Index, Dubai achieved a journey time of 12 minutes and 50 seconds for a 10-kilometer trip within the central business district. Now, if you compare this to other top cities, the number was 16 minutes 50 seconds in Singapore, 19 minutes in Montreal, 21 minutes in Sydney, 22 minutes in Berlin, and 36 minutes in London. Alright, so that brings us to the end of this video. Let's quickly recap everything we have discussed to spot real estate gold in Dubai. First, stick to the basics. Understand the nitty-gritties of real estate investing. Understand the Dubai market in detail. If you decide to take the plunge and want to see your wealth multiply, follow these 5 tips. First, follow government-led infrastructure growth. Second, choose exclusive rare properties. Third, focus on tourism-driven zones. Fourth, buy early during concept stages. And lastly, invest in master communities. You can apply one, more, or all of these as a combination to achieve maximum returns on your investment. I know there's a lot of information here, and the right investment decision depends totally on your preferences and goals. If you'd like help planning your Dubai real estate journey, feel free to reach out to me. I would love to help you grow your portfolio and build long-term wealth for you. And if you found this video helpful, please like it and share it with someone who's thinking about investing. And if you have any feedback or questions for me, I would really love to hear from you. This is Tavishi. Thank you for watching, and I will see you in the next one.